Alrighty, so good morning, college students. My name is Leanne Carrasco. I'm the financial aid counselor here in Uvalde. I'm super excited to be here this morning and to host the financial literacy presentation on budgets. This month it's about learning to manage your money wisely, making smart financial decisions, and to prepare for your financial future. Financial literacy is a vital life skill that will help you achieve your goals, navigate your ups and downs of your financial journey. At this time, I would like to introduce to you Kevin Gonzalez from the Small Business Development Center, who will be giving a presentation on budgeting. Of course, it's budgeting for college students. Again, Kevin Gonzalez from the Small Business Development Center.
Hello, everyone. Good morning. My name is Kevin Gonzalez. I work with the Small Business Development Center here in Uvalde, but we do have an office in Eagle Pass and Del Rio. Just quickly a little bit about me and my program. What we do is we help counsel entrepreneurs who want to start up a business but don't really know the steps of going about that. So why did they choose me to do the budgeting for college students? Well, probably because they didn't have anybody else, right? No, because in my line of work, I deal with a lot of financials, a lot of entrepreneurs, and a lot of small businesses, which is basically about financials and credit score and how important those aspects are. And I beg Leanne to let me do this because there are things that I want to talk about that a lot of people, I wish somebody would have told me when I was younger, when I was even 25, when I was 30, because they're so important now in today's world. So with that being said, can we move to the next slide, please? Thank you. So what is a budget? A budget is a financial plan that helps you manage your money by tracking your income and expenses. It allows you to see where your money is going and making adjustments to spending habits and achieve your financial goals. So I don't want you to be afraid of a budget. It is not a daunting task. In fact, we're going to go over a very simple, standard way to start a budget. But I guess the most thing that I want to reiterate is it needs work. You need to work at it. It isn't something that just comes naturally. And don't feel bad if you mess up your first month's budget, your third month's budget. Heck, I even mess up my yearly budget. Don't feel bad about it. It is not something that, and I tell most business owners too, it is not something that is set in stone. It is a plan to help you, a tool to help you achieve your goal. So don't let the fact that you messed up or you made a mistake here discourage you from keep moving forward with your budgets, okay? It is an essential skill that can help you achieve financial goals such as saving for a down payment on a house, paying off your student loans, or taking a dream vacation. Now, for some reason, high schools don't teach very much financial literacy courses, and I wish they did because they are so important for today's students. Can we get to the next slide, please? Thank you. So here are some tips on how to create a budget. So first tip, you're going to identify your income. The first step is creating a budget is determining how much money is coming in. This may include your wages, any allowances, and any other sources of income. So if your income varies by month, a good idea or general rule is to just take a 3-month average and start with that. Okay. So at the very top, and you can get as complicated a budget as you like, or you can do it very simple. What I tell most of my clients and students at first is paper and pencil. It's the easiest way. It's the simplest way just to start. Paper and pencil. Get all that down. And then if you're great at Excel or if you want to move it to an Excel spreadsheet, you can do that. or you can do some type of tool. There's many budgeting tools out there, and we're going to cover a few. But if you want to start, just start with a paper and pencil. So what you want to do on the top is write in your income and what's coming into the home or what's coming into the budget, right? So step 2 is to track your expenses. Once you have identified your income, the next step is to track your expenses. This includes rent, food, utilities, transportation, entertainment, and any other expenses that you may have. So again, if they vary, which all of our expenses should vary slightly month to month, general rule is to take a 3-month average of it, okay? So here's where I'm gonna tell you a little bit about the sections that you would wanna have on your budget, at least, at starting. So what you want to do is, under your first expenses section, is have debts. So this is going to include student loans, your car notes, any type of credit card payments. And you want to make sure that you write in there or budget for the minimal payment amount. Not to say that it's not to say that it's better just to pay the minimum. You always want to pay more, but you budget for the very minimal, because that's what keeps you current, right? So the next section you want your fixed expenses, or what I like to call your needs, right? These are the things that you cannot do without, which should include rent, food, your utilities, insurance, gas, things that don't really change month for month and that you need to survive, right? So you need to budget for those. And I know food is not really a fixed asset, but it is something that you need to have every month. So you need to have budgeted for food. Now, food is not restaurants, Taco Bell, Jack's. Food is just basically like grocery stores, what you're going to need to sustain yourself, right? So section under that, we're going to want, I usually title it fun or wants, really. So this includes your restaurants, your going out, clothing, shopping, even your subscriptions, your Netflix, your PlayStation, your Xbox, all the things that are nice to have, but don't need to survive, right? Under that, the next section you want to do is future. So this includes what are your goals? You know, what are your plans? Do you want to have a real nice vacation in a year? Do you want to get a down payment for a home? Do you want to put more aside for your investments? The next section that you want to do is do like your new car, your house, how much you're setting aside for future financial goals, right? And so the last section, which is probably one of the most funniest, is fudge. So this is not chocolate, right? Well, fudge is basically like, oh, fudge, I forgot about this. And those are those random things that come up during the month that you don't really think about. Maybe your grandma or your significant other or your sister had a birthday and you forgot to budget for a birthday gift. This is kind of the miscellaneous section of your budget that kind of pays for the little things that come up, and if nothing comes up, or if you go over your budget in one of these sections, you can allocate the miscellaneous fund to cover that budget, to cover that item. So you always want to have a little bit of a buffer, right? So that's really what a small, simple budget will do for you. So also too, I want to reiterate that every dollar should have a job, because if you put a job to every dollar that comes into the house, you don't lose track of where your money goes so quickly or so easily. And I know trust me, I know that a slice of pizza here, a cup of coffee here, it adds up at the end of the month to that monthly budget. So, the better you are at tracking your expenses, the more that you know where your money is going to items that aren't as necessary as other items in your budget. Here we go to the next slide. All right, so I kind of went into detail about categorizing your expenses, right? Creating a budget. After tracking the expenses, categorize them in different categories such as housing, food, transportation, entertainment, and so on. I like the needs and wants system because it kind of shows you exactly on what you have to have in there each month to live and what's extra that, all those nice fun things that you can do or go out to eat or whatnot. But it shows you the dynamic of, okay, I need X amount of dollars to live. Everything else is extra. So I like that principle and I like that setup. Okay. So set your financial goals, determine your financial goals and allocate your income accordingly. For example, if you want to save money, allocate a portion of your income towards your savings account. I absolutely think that everyone should work on a savings account, on an emergency fund. I understand that times are tough, but even if that's $5, $10 a month, a week, whatever you can set aside, I am a strong believer in that because emergencies happen, things happen that you just don't account for, and sometimes you need a little bit of extra help, right? So stick to your budget. This is where I made a point to. Oh no, I'm seeing the.
Oh, yeah.
Over there. Sorry. So stick to your budget, right? So this was at the beginning, where I told you sticking to your plan is key to successful budgeting, and this means discipline and avoiding unnecessary expenses. But don't be discouraged if you mess up, because it is a plan for you. And even if you mess up next month, you'll do better. Don't be discouraged by your budget. Next slide, please. So I put in these helpful things, some helpful little tools that I found online, and one that I actually use myself for anybody that wants to work on a budget, because a simple budget is great, an Excel budget is even better, but of course, what do we all have always on everybody, right? We all have a phone, right? So most of these are little budgeting apps that are totally free that you can download that do help in maintaining a budget. I have used 2 of these programs, but and the third. So every dollar is very, very good. That one kind of talks about setting a job for every dollar. Every dollar has a job. So it is by Dave Ramsey. It is free. Some things I don't see eye to eye with Dave Ramsey, but this is a great tool for a start of a simple budget. Monarch Personal Finance app. I use that personally on my phone. It is a great, great app, and it does a great job if you track your expenses every day, which you should because you have your phone, right? Or you buy a coffee, you can enter it in very quickly and very easily. It will show you where you spend your most money. It will categorize, which is a fantastic tool. Debt-free millennial toolkit. That's very, very nice Excel spreadsheet. But the one I use more than anything, if you like Excel and spreadsheets, is the Nerd Wallet free budget planning worksheet. It is, when I tell you it is free, it is 100% free. You can download it off the internet. It will not ask you for your social security number. It will not even ask you for your email address. It is just a 100% free spreadsheet, simple budget that I use personally, and I really enjoy it. It is very user friendly. Next slide, please. Okay, so additional suggestions to help with budgeting. Look for ways to save money, such as cooking meals at home, using public transportation, and taking advantage of student discounts. Avoid credit card debt and use only credit cards for emergencies or when you know it can pay off the balance in full. I am a big proponent of this. I see credit cards are necessary. I understand, even to my business clients, but they are dangerous in the fact that you can always have credit available can sometimes not be such a great thing, especially if you don't have self-control. So just be careful with your credit cards. Review your budget regularly and adjust as necessary. I like this statement because the first plan is not always the best plan or not always going to be the greatest. You're going to be tweaking your budget as it goes along during the whole year. Every 2 or 3 months, take a look at your budget and see where you can adjust it. Whether that be adjusting your financial goals, adjusting your expenses. It is something that does not have to be, a solid plan. It can change and it should change for, life changes and things that happen. Your budget should be adjusted to reflect that, right? Next slide, please. Okay, so I begged Leanne to let me talk a little bit about credit because credit is very, very important. I wish they had a credit class in high school, because credit can pretty much make or break credit if it's not taken care of correctly. And depending on where you live, it can dictate what kind of car that you drive, where you live, even some jobs that you can get or not get because of your credit score. I used to work at a bank, and one of the qualifying aspects is you had to have a good credit score. If you did not have a good credit score, you could not work for them. So why is it important? Oh, and I tell everybody this, Credit Karma. I'm sure you've seen commercials about it. I'm sure, it's everywhere, right? But I am a big proponent of that because it does not hard hit your credit. It's a free tool that can give you an idea of where your credit score is, but it can vary slightly. So usually learning this from the bank and also learning from getting your free yearly credit reports that you can get. Credit Karma doesn't always give you the same information that's on your credit score, but I still think it's a great tool because it can give you an idea of where your credit's at, right? So the relationship between credit scores and interest rates, the better credit score you have, the lower the interest rate that you should qualify for. And interest rates are very, very high right now, so you want the best credit score that you can get. And knowing that you have 750 good credit or 800 great credit or fair credit will better prepare you when you want to make those purchases for a car or a house or, rent an apartment. So interest can cost you more than what you think. And I like to include this next example because it really is important and a lot of people don't understand that interest can cost you quite a bit of money over time. Can we go to the next slide, please? So I included these two slides to show just how important credit is. So let's look at the one for the vehicle, right? The difference between good and bad credit on a vehicle. Same loan, $20,000, same term, 5 years. The interest rates are very different though. One for good credit is 6%, bad or no credit is 26%. If you guys are thinking that that's not a real credit interest rate for a car, I can assure you that it is 26% on some vehicles that have bad or no credit, right? So at the end of the day, what's the difference? Every time you make a payment, it's going to be $212 of sole interest that you're paying higher. Over the life of that loan, you would have paid $12,730 more for having bad or no credit as opposed to good credit. So that's $12,000 over 5 years that you could use for something else, that you could, put away into a house, put it into a savings account, put it into an interest investment, into a Roth IRA. Interest does add up. So credit is very, very important, more important than most people think. Bad credit, so the cost right here between buying a home, just a simple $200,000 home. The difference is 620 and a 740 credit score. The difference in interest over that life of 30 years is $70,000, $71,000 that you could have done. You could have gone to multiple dream vacations. You could have bought in a second rental home. Interest is very, very important, and it should be taken seriously. And I wish that more people knew. But that's what I'm here telling you guys, that that is a very important aspect of today's life. Next slide, please. Okay, so my last thing before I get done, and again, it's only because I wish someone would have told me this even 10 years from now, because of compounding interest is look into an individual retirement account. Look into preferably millennials and myself and Gen Zs. We all like the Roth IRA because the Roth, you pay taxes on the contributions, but your earnings grow tax-free. That means you pay the tax up front right now. You don't get a tax break, but when you start taking out your money, guess what? All of that growth, no one touches it but you. Uncle Sam doesn't have any lien on any of that money, so your earnings grow tax-free. I like a Roth IRA because you can take out up to your contributions at any point in time and not get paid, not get penalized at all. So that means if you've contributed $20,000 and your account has grown to $30,000, well, guess what? You can take those $20,000 out and not pay any interest and have no tax penalty on it. But if you take the $30,000, you will have to pay interest and taxes, early withdrawal fees on what's been gained. Time is your friend with a Roth, so it is never too late or never too early to start. And I tell everybody, please, even if you're not serious or you think that this is just, I'm not trying to sell you anything, do a little research on it, look it up, because it is very, very important, and it can help you reach your goals later on. Right? Next slide. Almost done. I just wanted to show you on this next slide what what a Roth IRA can grow to. And of course, we're not 15 anymore. 25. I wish I knew. I've only started investing maybe at around 35 years of age. So I'm hoping to reach the 1 million, but I'll be happy if I reach the 700,000, right? But it's never too early or late to start. And all you have to contribute yearly is the limit of $6,000, right? Get an annual rate, hopefully of 7%. It is a great tool, and it gives you a little bit more security later on in life. Okay. So these are just things that I wish people had told me at a younger age, and I hope you take something out of this presentation financial wise. And I think the last slide is coming up if you want to. There we go. Budgeting is an essential skill that will benefit you throughout your life. The following tips have been are being disciplined with your spending. You can achieve your financial goals and live a happy and stress-free life, right? Thank you so much for letting me speak, and I will give it back to Leanne.
Thank you so much, Kevin. We really appreciate you giving a speech today over budgeting. We're super happy that you were here with us today. At this time, I believe Grace Ibarra wanted to say something as well, just to give y'all some more information on what's going on this month.
Good morning. So I just wanted to clarify the scholarship situation. So what we'll be doing is 4 scholarships, one every week. So this week, for example, will have its own scholarship. I am not too sure on the amount. I did talk to my director, but she hasn't gotten back to me. And then, so it'll be one this week, one next week, one the following week, and then the last week of April we'll have another one. So that's one. It'll be smaller amounts, and then there'll be one at the end of the month that will have everybody's name in it who attended every presentation, and that amount will be bigger. So you have, if you attend everything, you have 5 chances to win, once every week, and then the big one at the end. If you have any questions, you can always email at the FA email. It's fa@solross.edu. And I think that's it for today. I don't know, Leanne, do you have anything else you want to talk about? Kevin? No? So that's, I believe we're done for the day. So there's a question, Leanne. I don't know if we can get Kevin or yourself to answer it. Maybe if somebody knows the answer to it.
Peter? There you go.
Okay. We don't see the question on here. Can you read it out to us, Grace?
Yes, it says, hold on, I lost it.
Look on the chat.
It was on the chat.
Maybe Q&A?
Maybe Q&A. Yeah.
What are some tips for cutting back on expenses if you find that you are overspending?
Oh, okay. Yeah, you can hear me just fine? So cutting back on expenses, looking at what you have for subscriptions, limiting some of those. Really what helps on a budget when you're trying to cut back expenses is the food aspect of it. That can really, depending on what you're buying and how you're setting up your weekly menus or anything like that, usually you can take quite a bit away from the food budget and put that to some other aspect that you're needing. So, of course, cook your meals at home. If you work, then pack a lunch. That will definitely help because, I mean, I'm sure everybody knows it's $10, $12 now for a cheeseburger when you can make a sandwich at home, and bring it with you for $3 or $4 of ingredients, and it can be a great sandwich too, the way you want it. But usually food is where you can adjust the most. And by no means do you have to eat rice and beans every day for the rest of your life, but there's always cheaper cuts of meat, and there's always ways to make them taste just as good, if not better. There's different recipes. I've recently gotten into like soups and stuff. I guess that shows that I'm getting older.
Or you can meal prep.
You can meal prep, and we used to do that as well. That is a very, very good tool because that also sets kind of like the menu for the week. So you don't really have much deviation there, which is great because you get home, you know what you're going to have for dinner. You don't have to think about it. You don't have to waste that type of energy. We were doing that for quite a bit too. Yeah, mainly I would say the food is where you can make the biggest adjustment. Can you make other adjustments? Absolutely. In looking at your insurance that you pay,
Less spending,
less
less shopping, going out,
I mean,
entertainment.
yeah, absolutely, absolutely. But really, it's just kind of trying the simple budget trick, writing things down, and seeing what is the need and the wants. And You don't have to cut out your wants completely, because what's the point in living life, right? If you can't have a little fun. But maybe instead of going out to eat 2 times a week, you go out to eat 1 time a week. Or maybe, you stop at Starbucks twice a week, maybe you only stop 1 time a week, It's really just finding a balance that is maintainable. Okay. But good, very good question. Very good question. You want to add anything else to that one?
No.
There's another question.
Sure.
It says, I have seen budget presented in wheels. Are those accurate, such as 25 or 35% for housing or 10 to 15% for food?
Yes, there are, I don't want to say hard rules, but there's like, I want to say it's the 20, 50, 30 rule, that 50% should go to your housing or your house's needs. 30% goes to, I want to say, to your wants, and 20% should go into savings. Those are great tools if you have a certain amount of income or disposable income at that point, because those are usually steadfast rules to where 50, if you don't have, or if your housing, and by I mean housing comes like, your rent or your mortgage, your utilities, your groceries, all those would fall under housing. If those are taking up a larger percentage than say 50%, then those budgets don't really work as well as if you were just starting out with a simple budget. But those are great rules to follow if you have that amount of income, right? Because we should all be saving 20% for, our investments, our retirements, our financial goals. But that may not be feasible for everyone, because housing for some people will take up 70% of their income and wages rather than 50%. So they are good rules, and if you fit into that category, by all means follow it. But if you don't be discouraged. Just try a different way, like a simple budget. Oh,
The budget
the
tool you
budget tool,
mentioned.
the one I like the best, did you bring the one I like the best, was the NerdWallet one. If you work with Excel or have any experience, all the formulas and everything are already on there. It's just a very simple spreadsheet, that I like. So the spreadsheet from NerdWallet is great. And the one that I use personally on my phone is the Monarch one. Yeah. I downloaded the Dave Ramsey. Yes, I downloaded the Dave Ramsey. I like the Dave Ramsey. The only thing I didn't like about the Dave Ramsey one is that you have to give every dollar a job. So it really was hard to set up like a little miscellaneous account or something like that. But the Monarch one is great. But the one I use personally, in my own home, is the NerdWallet, because it's a great free
Can't wait to try it.
Excel spreadsheet, and you can just, you do January and then you do February, and it's a very good tool, very user-friendly. Calculations are already done for you. You just type in, what it costs, what you brought in, what your expenses are. I definitely recommend that tool, and it's absolutely free. You don't even have to put in your email address. You can just download it from NerdWallet.
Thank you. Everyone said glad you were here,
Glad to be here.
and I think that's it. I think that was the last question for today.
There's one more.
All right.
One more. It says, are those numbers for single or family households?
I guess we're already coming on late.
Are the numbers for single are these numbers for single or family households? Which numbers are we talking about? Are we talking about the housing one under the credit score? Or are we talking about, well, it's gotta be that. It's either that or the Roth. Therefore, for family households, I would imagine. For family households.
I think that's for families.
This one? I don't know.
We weren't too sure which numbers they're talking about, but we believe it's for family households.
Mhm. Any other questions? We got it. Got it right?
Mhm.
She said they replied the percentages. I'm guessing the one you're talking about, the wheel that they had asked earlier, about 30%, 25% to 35, or 10% and 15% for food. I think it was an original question.
Yes. Okay, so if they're talking about that, then that can apply to single or family households. It does not matter. Once you're using percentages, it's all about the percentage of the total income coming into the home, whether that just be a single family home or whether that be, two partners.
Percentages. Okay, the percentages on the wheel. So you answered it.
Yeah. Yeah, it can be used for both. It just, once you hit percentages, it's percentage of your total money that's coming into the home.
Alrighty, well, again, thank you for joining our live. We encourage you to use these resources that Kevin has introduced us to, and let's make the most of this month and work towards and achieving our financial goals. Thank y'all so much. I really appreciate it.